Hello everyone, it's the Cowboy here. Welcome to Elliott Wave Cafe. In today's episode, I want to talk a little bit about gold. We focus mostly on Bitcoin and in these digital assets, which are very, very exciting. But I think we kind of tend to forget a little bit about gold, and I think it's an important part of everybody's portfolio, or at least it should be. I think it's got a nice place in there, and I wanted to take a look at some of the wave counts and see where we are in the overall structure and the overall count, kind of where it's pointing. So just a very, very simple, channel in here, it can show you that, from, 1970 in here to 2001, if you place the bottom of the trend line in here and then you copy it and put it back here to 1980 top, it gives you some projections higher. So looking at this from a perspective of this being a super cycle wave 1 followed by a 2, the overall price of gold based on its relationship to the dollar and the fiat currency here, it points for a larger third wave super cycle degree, near $57,000 to $60,000 gold, maybe, by 2050, 2060, right? So that's another, 30 to 40 years. We'll see what's going to happen to the dollar until then and how much Bitcoin will take market share from that. So just looking at this log chart, you can see how this is extremely possible. And we were just in the middle of this larger third wave cycle that began back in 2015. So I placed in here a few dates that are important, in the history of gold and its relationship to the dollar. You can read a lot of information about this. I'm not going to get into all these details. I'm not, very familiar. I'm trying to read more and more about it because it's super interesting. But, just kind of taking a quick brief look at it. In the 1930s, the United States made it illegal to own gold, so you have to sell your gold to the United States government. The United States accumulated a lot of gold into their reserves and wanted to use that to back up the dollar. So we came in 1940s, with the Bretton Woods Agreement, where the dollar was backed by the gold. That system, ran for about 30 years, or right after the war, as a lot of countries in Europe deposited their gold reserves to the United States for safety. And, as the country started to recover after the war, they started to demand their gold back, and, they were just purchasing, United States treasuries, and, whatever happened, the United States started to run large fiscal deficits, and countries started to lose their trust into the dollar because there was not enough gold in the reserves of the United States to back up all those dollars. So the system started to lose its strength, and finally it collapsed in 1971 when Nixon decided that it's not sustainable anymore to have all your dollars backed by gold. There's not enough gold, and it took us off the gold standard. So then that was the beginning of the large run into the fiat currencies, and the beginning of this new kind of monetary system where we are today. And a few years later, the petrodollar system began, and the United States and Saudi Arabia entered into the agreements. How can we sell oil to the overall globe and the markets, and they have to use dollars for that. And with the dollars that countries use, they purchase United States treasuries, they actually lend the money to the government, and that's where we are right now. And lately, a lot of these countries started to sell the United States treasuries. So anyway, it's a bigger discussion on that. You can find a lot of information about it. But so it's super interesting what's going on. And now we'll see what's the next system. I mean, Bitcoin came around 2008 financial crisis. Here we are, almost 12 years later. And it's starting to get a lot of market share. So it's very interesting what's going to happen with the price of gold going forward. In terms of a cycle and super cycles and where we are in the counts, this is kind of what I wanted to talk about. So, this kind of was a very large correction here between 1980s all the way to 2000. So it was a 20-year correction into the price of gold. So we're considering this, being the largest corrective move. We're considering this a wave 2. This is a nice clean impulse. You have a 1, 2, 3, 4, and 5, huge inflation back in the 70s, the Vietnam War and all that. So the price of gold went from, $100 all the way to $1,000, right? So 10x for the price of gold. And, we've had a major corrective move that took, again, about almost 20 years. And then, back in 2000, we started to run up again in gold, and the price of gold moved from above 200 to almost 2000. So another 10x price rise into the price of gold, right? So we've hit the highs soon after the financial crisis ended. That kind of finished in 2009, right? I think it was in March 2009 when we hit the lows, and then a couple of just a couple of years later, people were worried about inflation and the money printing and the Fed, and we actually it didn't do any of that. Actually, we entered into a period of large deflation and kind of collapse into the price of gold, and we moved from 2010 back to 2015, so a 5-year decline into price of gold that took us from 2000 all the way back here to almost 1000. So we just cut it in half, and since then we started to run up again. Right, so we are in a new cycle into gold, and I think we're in the middle of this larger third wave advance. And kind of where do we go from here? What are the risks, and how much confidence I have that this is actually happening? So we made new highs, which is very encouraging, and this is the first initial indication that we're actually starting a new advance. The risk is, as you know from the Elliott wave methodology, is that this wave 2 is not complete. And the way this could still be in progress is that this would be a wave A decline, which happens in 3 waves, and then you have a wave flat, where you have a B up here, which is part of a flat, and then you sell over in C, and then you consider this wave 2 cycle complete before you run up. I don't have a high degree of confidence in this because of the way this move to new highs here happened. I think it's fairly impulsive to consider it a B wave, and I would have liked to see more of a proportionate look between this A wave and the C wave to consider it a wave B of a flat. I don't want to get too technical, but this would be the risk in case gold would sell lower, right? And what that would mean is that you would have, in terms of kind of fundamental, you would have positive interest rates in here, and you would basically move from, and I don't want to talk too much about this, but you would kind of push back more into a deflationary period, or you would get some kind of a yield curve control from the Fed, and this would lead to a decline into the price of gold. And you wouldn't get into necessarily an inflationary environment, but more into a controlled environment. And that would kind of pull the gold back here in the second wave of a flat in a C wave, and you would sell back here towards $1,000 gold before you continue to push higher. There is an inverse relationship between the interest rates, the real yields in the interest rates, and the price of gold. And right now you can start to see a tick up in that with the rise in the yields, and you can see the price of gold kind of correcting a little bit. So we'll see if that it's going to sustain and continue to move. But again, I don't want to talk too much about it. In terms of the cycle where we are in the price of gold, I think that the direction is clearly up, either from here or after a sell-off in gold. Okay, so we're going to pay kind of close attention to that. It's not my preferred interpretation, but I'll continue to watch it. So going from a 3-month chart to a 1-month chart in here, you can see how we would be in the first primary wave of this larger third wave cycle. So that would take us in a 1, 2 in here, and this would be a 3. You would have to do a 4 and a 5th to complete wave 1. Then we would enter. This would possibly take gold maybe towards $3,000, and then, or 2,500, and then you would pull back in a second. You would have another decline in here that would build up the ramp for the larger third wave advance. So for right now, I consider that we are in this first wave primary that's not complete, but it's in its final stages. So going from a 1-month to a 2-week chart, you can see how we've completed this wave 1 intermediate. after the corrective move, right? This kind of 5-year decline in gold. You've completed the second wave intermediate, and we're working our third wave. So we are in the midst of this run, impulsive run up that started back at about 1,000. We are at about 2 with a pullback here near 1,700. So the question is this wave 3 over or not yet? And I think based on the corrective pattern that you get from the highs, I think we'll still have to do one more push up higher here to finish this wave. And, this clearly looks corrective. And I think it's going to lead to an impulse. So I think in terms of getting involved into gold, it's an important level to get into. But even if that's not correct and the move continues to correct lower, we're going to be correcting in this fourth wave intermediate in here, right? I would have to take this wave 3, place it back in here. I would consider this move somewhat complete, and you would fall back into this larger fourth wave. As long as you stay above 1400, which is the top of this wave 1, because we know wave 4 cannot finish in the territory of the wave 1, that would lead to a correction. You would look to a fib pullback of about 38% of this entire third wave advance, and it would still lead to another advance up here higher to complete this fifth wave intermediate, to complete this wave 1 primary. So overall, I remain bullish in the price of gold, either from here or from slightly lower. And, I think accumulating into this correction, it's a good thing. Once we get and we reach a first wave 1 primary in here, then the larger decline in gold will start, and it will probably be maybe another $1,000 decline, maybe for like 3,000 to about 2,000, where we would do a second wave before we actually start embarking into the larger third wave. So I don't know what's this going to mean in terms of fundamentals, what news are going to be, what new agreements, what the new gold, deposits or are going to be discovered or whatever. But something will trigger all this corrective cycle. So I like to use, fundamental analysis combined with Elliott wave and just kind of look at where we are, and you can, where it's better to wait before you buy gold, where you can kind of ease off into your gold holding as your portfolio. So obviously, if you are in the final stages of an advance, right, you would want to kind of trim your gold positions, and invest into something else, maybe in the stock markets, in the equities, in Bitcoin, and whatever, and then use any period of decline to kind of adjust your portfolio, buy back the gold that you sold off, and then look to the new cycle. So using Elliott wave and this methodology to keep you on the right side of the trade, I think it's important, and it can help you kind of balance out over time. So going from a 2-week to a 1 week, just to kind of get back in some smaller time frames, you can see how that's the wave 2 cycle. That's intermediate 1, 2. We're looking here into this minor, so 1, 2, larger 3. That's why I think that we still got to push up higher here, and this could be a fourth. Maybe this wave 3 is not finished even yet, and you're doing a 3, a 4, and a 5, and this wave 3 minor is still in progress. So there's a couple of scenarios here that can happen, but overall you want it to continue to remain bullish. You can even place a challenge in here, right, into let me just see if I can kind of grab it from here like that, right, and you're looking for this to continue to, you want to give this market every chance it has to continue to stay bullish with it, because this move from the highs is clearly corrective. It seems to be in 3 ways. It's if not finished, it's almost finished. Maybe another push lower if it is, or maybe it's just wave 1 of the advance in here. But I think these are good levels to get involved in gold and then continue to push higher. Now, if we're breaking lower and we're starting to attack this $1,400 level, I'm going to start to be very worried that some kind of a major top was hitting gold, and we're actually in a larger decline in that C wave of that second wave flat that I was talking about prior. So as long as these levels continue to hold, you can kind of assimilate and accumulate against them, right? So going back to a 4-day chart, clearly corrective. Going back to a 2-day chart, you can see how the move it's nicely contained between parallel lines, and it would be a very good look in terms of the right look of the Elliott structure if this thing would break up, right, and then correct lower again and then go back up. Okay, so I'll leave it at that, guys. I just wanted to do a little bit of an overall view into gold. If you want to find more about fundamentals, again, there's plenty of information out there about it. We tend to focus more on the Elliott wave and technicals on it, but if you enjoy it, don't forget to hit the thumbs up, subscribe to the channel. I'll try to do more of this regarding some of the other asset classes. We'll look at oil, we'll look at the S&P 500, we'll look at equities, and the dollar index. You guys know already my coverage on Bitcoin, and I've made a video yesterday about Bitcoin and Ethereum technical analysis. I do that every 2 weeks, and I'll try to incorporate more of a macro view as well. Maybe do more videos on that. But come and visit us into the pro room where we actually trade. We're actually long on gold. We initiated a long position based on a small pullback back in here at about 1800, and I'm not sure exactly what my entries is. But if we're gonna break below this 1700, I'm gonna get out and look at the next opportunity. But I think this could be wave one of the lows with the 2, and I'm looking for a break of this channel to continue to maybe get a push towards new highs in gold. So we not only present counts, we trade them, we get into the smaller time frame from a 1 hour to a 4 hour chart, and pick really good entries based on the pullbacks, and either via futures or you can use ETFs, whatever. It's your method of using gold and trading gold. I can give you some of those levels that I think are important to trade against. So come and visit us into the pro room. There's a link below as well. We can take a trial for it if you want, or there's a public forum as well up there where we talk about cryptos and all other things in there. It's a really fun place to be. And until next week or next couple of weeks, I'll see you guys later. Again, thanks for watching, and don't forget to subscribe and to give a like, so our content can rise and more people can see what we're doing. So thank you so much. Bye bye.